Welcome to the post-award financial compliance presentation for round one of the ReConnect program. I'm Tim France, and I'm the Deputy Director of the External Compliance Division. Our division is responsible for monitoring RUS awardees for financial compliance. For those who are new to borrowing or receiving grants from the telecom program, you'll become very familiar with our group, as we're going to be visiting your organizations to perform site visits multiple times throughout the awards. With that, I'd like to begin, because as you can see on the slide, we have a lot of information to go over in this presentation, and I'd like to leave as much time for answering questions at the end as I can. Please submit your questions as we go through the slides, but I won't stop to answer them until after the presentation is given. I also want to point out that this webinar is being recorded and will be available along with the slides for future reference. The first thing I want to point out are the resources that are available to help you understand the compliance requirements of your ReConnect award and where you can find reference to the information that I'm going to provide to you during this presentation. The first place you begin to see the requirements of the program was in the ReConnect funding opportunity announcement for round one. I'm going to be referring to this document as simply the FOA. Now that awards are going out, you will find some of the same requirements along with other compliance requirements located in your award documents, your grant agreements, loan grant combination agreements, or loan agreements. We have also posted construction procedures for the ReConnect program out on the ReConnect website. The ReConnect website is another great resource that includes sample documents, other guidance, and also answers to frequently asked questions. I'm going to be referring to these resources throughout my presentation. You will notice that the resources I mentioned on the previous slide often refer to each other to provide additional guidance. Some examples are listed here, like the FOA requires you to comply with the ReConnect program construction procedures when constructing project assets. The FOA requires you to comply with the grant loan and grant loan agreement, grant loan combination agreements, and these documents provide reference to certain regulations that you must also follow. It's important to become familiar with these documents and also the regulations they reference to avoid pitfalls when completing your ReConnect project. The first thing I want to discuss is what are the eligible costs for this program. The FOA starts the process by letting you know we are only financing the capitalized costs of improving or constructing a broadband facility. The only exception to capitalized costs are reasonable pre-application expenses, which are capped at 5% of the award. Outside of actually constructing assets, the FOA also allows for the acquisition of an existing system, which is capped at 40% of the award, and can also only be financed using a 100% loan product. The FOA limits what will be financed if using satellite technology. And finally, the FOA is referring you to 2 CFR Part 200, which requires all costs to be reasonable, allocable to the project, and necessary to the project to be acceptable for financing under this program. The next resource is your award documents. As I go through this presentation, please note that the various section numbers that I reference may be slightly different in your award documents, as these references were obtained from the sample award documents found on the ReConnect website. So now the award documents are going to narrow down even more what construction or improvements can be financed. The award documents are going to only allow project funds to be used for the specific project that you described in your approved application. You cannot make material changes to this document without first receiving written approval from RUS. And finally, the ReConnect construction procedures require you to only use new materials and equipment for the project. The resources have also specifically identified costs that are ineligible for financing through the ReConnect program. The FOA identifies the items listed here. No operating expenses. If the cost is not a properly capitalized cost, then it isn't acceptable for financing. The timing of the cost is also important. Note that if costs were incurred prior to the date the application was submitted, then it isn't acceptable for financing, except your pre-application expenses. However, any pre-application expenses incurred prior to the publication of the FOA, which is December 14, 2018, will not be allowed. Acquisitions of an affiliate or purchases from an affiliate are not allowed. Transactions with an affiliate must have prior specific written approval from RUS to be allowed. Note, if you're using an affiliate, the costs are limited to the lower of actual cost or market value. No markups are allowed, and also we will expand our right to review the underlying books and records of the affiliate if granting approval to use the affiliate. We are not going to fund an acquisition of a system that we already funded. Purchases or leases of vehicles are also not allowed, unless it can be documented that they are only used in the construction or system improvement included in your application. The FOA continues with facilities leased under an operating lease and under an indefeasible right to use agreement. Mergers or consolidations of entities, acquiring spectrum, mobile facilities, acquiring systems that already provide sufficient broadband access, or refinancing outstanding debt. These are all not allowed. The construction procedures prohibit material or equipment purchased or construction performed prior to an award offer accepted by the applicant. So only any of those costs, if you did that before the award was accepted, they will not be acceptable. There are guidelines around getting award funds advanced. I heard a lot of questions on yesterday's webinar. Hopefully this will clarify a few things. And I also know that you'll get more information on this in George Oyugoki's presentation later this week. The first thing I want to talk about is the pledge deposit account. Your award documents require you to open and maintain a deposit account pledged to RUS and also provides guidance on how the account should be set up. All funds used for your ReConnect project must be deposited into this account and can only be dispersed from this account when approved by RUS. This includes matching funds, amounts disallowed by RUS loan and grant funds, and also any other amounts that RUS requires you to deposit. The ReConnect construction procedures in FOA also provide references to the pledge deposit account. One point to remember, no funds will be advanced until all other sources of funding have been obtained and pre-award conditions have been met. The order of funding is also documented in the FOA and award documents. You must expend your own funds first. These are your matching funds or cash provided in lieu of loan funds, followed by loan funds, and then finally by grant funds. The only exception is that grant funds will be used to reimburse allowable pre-application expenses included in your first advance request. In order to get approval to use project funds deposited into the pledge deposit account, you will need to complete and submit an RUS Form 482, a financial requirement statement, or what we refer to as an FRS. Please note that this needs to be done for all types of project funds, whether it be matching funds, loan funds, grant funds, or any other funds that were required to be deposited into a pledge deposit account. Other items I want to point out are, you should not submit these more frequently than once per month, and you can only request amounts needed for immediate use, which we have defined as within 60 days. This is a reimbursement-based program, so you must have incurred the cost to request reimbursement. Now that we've discussed how to get funds advanced, and you already know they have to be deposited in the pledge deposit account, there are rules on when you can disperse funds from the pledge deposit account. You can only disperse funds from the pledge deposit account for expenditures that are approved on an FRS. I can't emphasize this enough. This is the only time you can make a disbursement from the pledge deposit account. It must be supported with an FRS approved by RUS and returned to you. This gives you authorization. You must maintain records for every disbursement from the pledge deposit account and cross-reference it to the approved FRS. For example, if RUS approves $100,000 of construction expenditures and you write a check to the local Lexus dealership, it's going to be disallowed.
Okay, looks like you're live.
I'm live? Okay, I'm going to get back on slide 21. Or no, 19, sorry. Okay. Everyone, apparently I lost connection. So money. This is going to give you the same reference that we had on slide 19, except it's going to note that interest is earned and deposited in the pledged deposit account, and the only way to get it out is through submitting an FRS for approved project purposes. Okay. What's the deadline to complete your projects? You have 5 years from the date funds are first made available to you and have your project fully completed and operational. And we've already touched on affiliated party transactions, but I'm going to emphasize it. You must have prior written consent to use an affiliate on the project. Any costs incurred are limited to the lower of cost or market and will be subject to verification of RUS. Our field accountants will look at the books and records of any affiliate you are using. If we are prevented in any way, the entire cost will be disallowed. Here's a definition of an affiliate included in your award documents. It's pretty broad and its intention is to be all-encompassing. Some things I've seen in the past are husband and wife have different companies, insist that they are not affiliated. I assure you they are, and we will treat them as such. I've also seen people claim that companies are unrelated, yet the owner of one company is the same owner of another company through multiple layers of holding companies. Again, they are related and they will be treated as such. Remember, you must have prior written permission to use an affiliate. So if you try to hide it and it's uncovered later, no matter if the costs were fair, they still will be disallowed because you didn't get prior approval. So if you have any questions on that, please ask in advance and get that approval up front. Again, another reference on affiliated party transactions. Hopefully you've gotten the point by now. Let's talk about loan security. Loans will be secured by all assets of the awardee, including revenues. We need an exclusive first lien. Now, we may share this lien on a pari passu basis with another unrelated entity, but we will not share it with an affiliated entity. The awardee must own the project funded assets, not a subsidiary, not a parent, not a lease, not an IRU. You must have RUS approval to sell or lease any of your facilities. The award documents reinforce what we just talked about and also state that you are not allowed to enter into any additional indebtedness without prior written approval from RUS, whether it's secured or unsecured. Grant-only funding has slightly different security requirements. The FOA requires you to provide RUS with an exclusive first lien on all grant-funded assets. Any sale of grant-funded assets must comply with 2 CFR 200. You will have to repay the grant if the project is sold, transferred, or merged without RUS approval, and any sale or lease of your facilities must be approved in writing by RUS in advance. The awardee must own all grant-funded assets. And I also want to say, oh, I'm sorry, the next slide's that. This is more information on that, but the award documents reinforce what the FOA stated and also notes that we will not share our first lien position on grant-funded assets. Okay. Let's talk about our right to inspect. The FOA starts it out with requiring awardees to comply with all of RUS's reasonable requests and support our ongoing monitoring efforts. For those of you who are not familiar with the telecom program awards, we will be coming out on site multiple times to inspect the broadband facility constructed, as well as your books and records supporting the costs submitted to RUS for the project. We will also look at any affiliated party books and records if applicable, and may make copies or extracts from those records. Your award documents will reinforce and expand on the FOA's requirements as shown here. I'm not going to go through it, but it's here for reference, for later reference. There are various reporting requirements included in the FOA and award documents. The FOA provided for the following reporting requirements: annual comparable audited financial statements, which include a report on compliance and on internal control over financial reporting, along with a report on compliance with aspects of contractual agreements and regulatory requirements. We refer to this as the management letter. And details on this report can be found in 7 CFR 1773. This requirement spans as long as you are expending grant funds or have an outstanding loan balance. So you are going to be submitting annual comparable financial statements, audited financial statements, throughout your entire life of this project. If it's financed with grant funds, once you are done spending grant funds the year following that, then you will not have to submit these annual financial statements. FOA also provides for quarterly reporting, which includes balance sheets, income statements, statements of cash flows, package summaries, number of customers taking broadband service per community. These are due 30 days after each calendar quarter and will continue for the loan amortization period or the economic life of the facilities funded for 100% grant projects. You will use the RUS online reporting system for sending this into RUS. You will have to update the service area maps using the RUS mapping tool on an annual basis and also upon completing the project. Note, if you do not fully complete the project, award funds may be rescinded and paid back and be required to be paid back to the federal government. There are also semi-annual reports required to be submitted for 3 years after the completion of the project. The award documents affirm what the FOA required and also expands a little bit on the requirements. I'm providing this slide along with the next slide for your reference. I'm not going to go through it, but just wanted to talk about it. Here are some more documentation of the reporting requirements included in the award documents. Your accounting records need to be maintained in accordance with accounting principles generally accepted in the United States of America. The system of accounting should meet the requirements of RUS Bulletin 1770 B-1, 7 CFR 1770, Section B, and 2 CFR 200, noting that for this purpose, grant recipient is synonymous with loan recipient or loan/grant recipient. The award documents reflect the same requirements. The FOA award documents and construction procedures provide guidance on records retention as shown in the next 2 slides. I'm not going to go through them in detail, but I want to caution you to keep all supporting records until the project has been fully audited, approved, and closed out by RUS. After that, there are going to be certain timeframes that different records need to be kept as documented on these slides. And I'm not going to go through them, but you can read them on your own at a later time. After reviewing your underlying records, we may disallow certain items. The award documents provide for our right to disallow certain costs and take other actions. If disallowances are made, RUS will instruct you on how to satisfy the disallowance. It is up to RUS to decide on how the disallowance can be satisfied. The award documents have various conditions which you must follow. Certain conditions have to be completed before award closing, as shown here. Other conditions have to be satisfied before RUS will make funds available, as shown here. And even more conditions must be satisfied before RUS will make individual advances, as shown here. The award documents have various affirmative covenants, including you must have adequate funding in place to complete the project. You are required to provide RUS with certain notices if applicable, shown here. You must have a rate structure in place that will enable you to meet certain financial ratios and requirements. If you fail to meet these requirements, you need to provide a corrective action plan to RUS. You have a service obligation to provide the funded service for the life of the loan or the composite economic life of the assets financed, whichever is longer. There are obligations with respect to the construction, operation, and maintenance of the project. On this slide, you're going to find some other requirements for your reference. We obviously don't have time to go through each one, but I just wanted to have them here for your reference. There are also various negative covenants that you must keep. These are shown on the next few slides. I'm going to kind of scroll through them real quickly. Again, you're going to be able to come back to this presentation and reference it. And this webinar is also being videoed, so you'll be able to have that also. Here we go through all the negative covenants. And then the award documents also reserve certain rights for RUS. The award documents provide for RUS to perform any of the following actions. You can see termination of an award offer. We have audits and compliance reviews. We are allowed to disallow expenditures. We can suspend advances if there's issues going on. And In places where you might be having trouble paying back a loan, we actually reserve the right to give payment extensions. We have the right to expend money if we have to step in and do something on your behalf, and we have the right to file financing statements to make sure that our security position is secure. I didn't have this slide on here, but notes for this, but there's going to be some other upcoming post-award virtual workshop sessions as shown here tomorrow, Friday, and next Monday. We encourage you to attend all of them. And with that, I'm going to see if I can answer any of the questions that people have submitted. You'll just give me one moment to sort these out, get a grasp on them. So bring them up into a large window, bring them over here so it looks like I'm looking at you instead of my other computer screen. Okay. Does the pre-application expenses come from loan proceeds or grant proceeds? Okay, so pre-application expenses are to be requested on your first advance request, and they will come out of grant proceeds. So that's the only exception for getting grant proceeds in advance of any of your matching funds or loan funds. What is required if a vehicle is going to be purchased using RUS funds? Well, we kind of touched on it, but if we are going to finance a vehicle, first and foremost, it has to be used primarily for the construction of the facilities. If you're an organization that has a large territory or multiple territories, some might be for this project, some might be outside of this project, it's going to be hard to demonstrate that that vehicle is being used primarily for the RUS funded territory. So you're going to have to somehow document, if you want to use funds to purchase a vehicle, that it is going to the primary use of that vehicle is for constructing the assets in the proposed funded service territory. What if we have one company that pays all of our employees but transfer their pay to each company with intercompany transactions? Is this okay? This is an example of an affiliated party transaction. So you're going to have to get prior approval to use this company, and you're going to have to, when they allocate those costs down to the sub companies, so the company that actually has the award that's using this company's employees, it all has to be based on cost. There cannot be any markups, and so all of that is going to have to be documented, and you're going to have to be able to show it. And also, we are going to have access to that company, the main company's books and records that house all these employees. So first step is check with RUS, walk them through what you want to do, and they will determine whether or not that's going to be acceptable or not. And again, we will come out to verify those costs, so there can be no markups. Can you use a capital lease to backhaul fiber to feed a PFSA? That is more, I don't want to say no, and I'm not going to say yes, because I'm not going to give blanket approval for this. That is a specific situation where you're going to have to walk that through RUS. There's a lot of different leasing arrangements, and I even use that term loosely. I've seen a lot of IRUs, which are indefeasible rights of use contracts, where people claim that's a capital lease and they're recording it as a capital lease, but when you dig down into that agreement, it doesn't really qualify for a capital lease. So if you have an arrangement like that, that's something that you're going to have to individually walk through with RUS to determine whether that's acceptable or not. And then another question would be to ask, was that in your application? Did I understand you to say the fiber constructed under the ReConnect program cannot be leased to affiliates for operation? All assets built on this fund have to be owned and maintained by the awardee. So what type of lease are you talking about? A capital lease? In a capital lease, you're technically transferring ownership of those assets, so you would not be able to do that. Again, I would check with RUS of your specific situation, what type of lease you're trying to do or what type of agreement you're trying to do to have somebody else run this system. But as a rule of thumb, no, the assets constructed have to be on the awardee's books and records. So again, check with RUS specifically. What is the estimated time from when we submit the FRS until we get approval to authorize disbursement from the pledged deposit account? So this can vary. We try to process these things as soon as possible. However, depending on the documentation that you send in along with your request, we may have questions and we may need answers to get through that. So I can't give you a set time, but I will say they try to process these as soon as possible. That's one of the reasons we extend the definition of immediate use funds to 60 days. So that way, if you submit something that you know you're going to have to pay in 60 days, you have an invoice or you have some sort of documentation that this cost was incurred and you need to pay it within the 60 days, we allow you to submit that 60 days prior to it being due. So again, the program office tries to work as fast as they can to get these processed. But if the documentation you're sending in raises questions that may need to be answered, it could delay that approval. So I guess part of that is if the program office follows up with a question on what you submitted, try to answer that as soon as possible because it could delay your approval to take money out of the pledged deposit account. On debt, is 0% or low-priced interest rate loans from car manufacturers included in having to get approval? I want to say no. That's kind of like in ordinary course of business, you extend credit, things like that. Purchasing a vehicle that you use, I would say if it's material, yes. If it's immaterial, you probably don't need you wouldn't need the approval. But if anything's in question, request RUS. Reach out to RUS and ask if you need permission on that specific item. And if you do, ask for the permission. If they say you don't need the permission, then you're in the clear. So if you have a question on it, make sure you ask. What if we have lines of credit already in place that we may have to use because of coronavirus? Do we have to have them approved? Again, if you disclose to RUS all your existing debt and those creditors sign the intercreditor agreement that they would allow RUS to have a first lien position on everything, then you're probably okay. But if this is something that RUS is unaware of, or if you're extending anything or taking something out that we're unaware of, you need to get RUS approval. I don't know. That didn't go away. Okay. It doesn't appear that the slides are changing. Hopefully that was when we were having the technical difficulties. When we pay for construction and equipment invoices that are from our matching funds, do we first have to deposit the funds in the PDA and issue the checks on that account? Under the BIP program, I believe we paid for construction and equipment out of the general fund, and then any reimbursements from RUS were paid to the PDA. Okay, so in an instance like this, if you're paying for something on your own in advance of getting the funds, you can pay for that out of your general funds. Once you request approval from RUS is going to deposit those funds in the pledged deposit account, and then you can use those funds to reimburse yourself for those costs that you've already paid for. Again, I said it in the presentation, you need to make sure that you document when you disperse that money out of the pledged deposit account that you're reimbursing yourself for the specific cost, and the specific cost should be identified along with, I think Chris Colberg touched on it too. You're going to want to show what general fund paid those costs. You're going to have the invoices, all the supporting documentation for those costs. So that's how it's going to work. Very similar to the BIP program. Can companies complete the project ahead of the timeline they submitted on the application? Of course you can. Does the pre-application expenses come from loan proceeds or grant? We've already answered that. For some reason, these things are showing back up on my screen, and I apologize for that. Employees are maintained on a parent company. These employees will code time directly to a grant-funded project, the subsidiary. Is this an affiliate transaction? Yes. That will require pre-approval before proceeding? Yes. All labor costs are actual. Good, because that's all that we will finance. So get that approved. That way we have an understanding, because when you request that approval of that affiliated party transaction, you're also going to give us the right to inspect the books and records of that affiliate. Can you use a capital lease for backhaul fiber? We already answered that. So let's see. For some reason, there's a lot of questions that are popping back up on the screen. If we pay project invoices and then submit them to RUS for true reimbursement, are we okay? Can disbursements from the deposit account be made directly to the awardee? Okay. You shouldn't be projecting invoices. You should only be requesting funds for your immediate needs. So in very limited cases, would I say, yeah, if you know what that invoice is going to be, they just haven't mailed it to you or something like that, and it's going to be due within the next 60 days, you may be allowed to do that. But if for some reason there's a variance between what you submitted to RUS and the invoice that you actually got, you're going to get in trouble with that. So I don't recommend you do that. If there's some sort of situation you find yourself in, reach out to your GFR or to the program office and ask what they recommend. Can disbursements from the pledged deposit account be made directly to the awardee? Yes, as I kind of indicated before. And another question, if you are reimbursing yourself for expenses that you paid out of your general funds, you can do that. Again, make sure you have all the documentation. Who do we need to talk to with regards to a subsidiary operating our network? I would start with your GFR, and then they can forward you to somebody in the program office that can give you additional information. Okay. I don't see any other questions that I haven't answered. Oh, one other one that I see that's not hasn't been answered. Does the affiliate permission need to be specific to ReConnect funds, or is permission from other RUS programs sufficient? Make sure you get permission specifically to this program. Okay. I don't see any other questions. And since we have gone over our time, I am going to end the webcast.